Three. Welcome to Wealth Matters Podcast. Aaron and Ryan, how are you guys today?
We're
Doing
good.
well.
We're good. How are you?
Good, thank you. Nice to see both of you finally,
Yeah,
face to face. So, can you tell my listeners what do you guys do?
Sure. Yeah. So what we have is a portfolio management solution for the commercial and multifamily space. And what we do is we provide basically a wealth of different digital management solutions for them to help better manage their portfolio of assets. And what we do is we utilize the underlying data in order to help them kind of manage their expenses a little bit better with the initial product launch and features focusing solely in the insurance space.
Oh, insurance space. And that's what we are going to talk about. So, can you tell Aaron what's your role in the company, and Ryan, what's your role in the company?
Sure. So Ryan and I are brothers, actually.
Okay.
I'm a serial entrepreneur. Had several before this. I'm also the licensed insurance broker. Ryan brings the real estate piece. I bring the insurance piece to this.
That's awesome. So, why is insurance so important?
You never know what's going to happen. Is really what it comes down to. I think, especially in the residential rental market. Unlike homeowners insurance, where you're living in the house, you know what the exposures are, you're around every day, you see what those issues are. You end up putting a lot of trust into a renter, property that you own, and you obviously want to make sure that investment's protected, and that's really where insurance comes in. It's something that we have on our own rentals.
Exactly.
Portfolio.
And to add to that, right, exactly what you mentioned, because there are so many unknowns. When you are living in the house, you exactly know. And even then, you want to protect your primary residence too. But on the other side, someone like me who invests out of state, sometimes I haven't even seen the property. So there is even bigger unknown. I don't even know who my tenant is because I have a property manager, right? That's the part of the scaling up, right?
Exactly,
so you got to have the best insurance policy to protect your, investment, right? So, and also you have to make sure that it's a landlord policy, right? It's not a primary residence. Sometimes it could be vacant, so you want to make sure it has a vacant clause as well.
Exactly.
So what are some of the important aspects of a landlord policy?
Well, I think you really nailed hit the head on the nail there. There's definitely a big difference between a homeowner's insurance policy and, a dwelling or a landlord policy.
Right.
Your homeowner's policy is going to cover the entire building. It's going to cover everything that's inside of it. But you're going to get a cheaper rate for a landlord policy or a dwelling because you're just covering the actual bones. And you want to make sure that's adequately covered to make sure that in the event of a total loss or in the event that you have any type of legal or medical exposure, if someone gets hurt on the property, that you have the type of liability coverage. Because again, you're not there, as you said. You might be invested out of state. You don't know who the tenants are. And so that's really the most important part, that you're covering both the actual structure of your investment as well as anything that might potentially cause or expose you to liability.
And do investors need to think differently when they are starting out? If they are just going to buy one single family, what do you recommend them? And if they are going to scale up and buy a 4-plex or even a 10-unit building, is there any difference?
Yeah, things change, depending on who you are. The broad scope of the insurance, typically if you're only buying one, it's going to cover one unit. But when you begin to scale up, there's an opportunity for you to bundle and save on coverages.
Okay.
You think about it in terms of an investor, and you put your investor hat on. Cash is king and cash flow is king.
Of course.
So making sure that you're limiting your line item expenses as much as possible is critical in order to turn a profit and make sure you're able to also cover your property appropriately. So really, and Aaron can speak more to this, but it's important for you to kind of readdress what your insurance looks like as you go from one property to 4 to 10, because it oftentimes changes pretty dramatically.
Yeah, and one of the things we run into a lot is that, especially as investors continue to add assets to their portfolio, they're also going out and they're getting one individual policy. And so
Right.
you're going from one, maybe two, now you're up to 10 units, you might have 10 individual policies.
Yes.
And that's a significant amount of coverage for you if you think about it, where you might just be able to get one policy that's covering each one of those different assets, even though it's listing the different LLCs that you own. Right? And then you might
That's a good idea. And also, just to add to that, just the managing of those policies, right? So when I was investing in Milwaukee, then in Iowa, and then in Birmingham, because I couldn't find one insurance agent who would cover all of those states or cities. So I ended up working with 3 different agents, and it was crazy just trying to manage everything. They all had different dates, communication, etc. Was a nightmare. It's like same as having, different property managers in every state. Now I had another complexity in the insurance space.
Yeah, it's the exact same issue, and that's where that's really the challenges that we've been trying to address, because the problem that we ran into really is that we were too small for some of these really large brokerages that can cover every state, but we're still a little too big because our investment portfolio is outside of maybe one state or one region, where you're running into the same issue you just talked about, where you might have to go to 1 or 2 or 3 different agents. Now you have policies that are spread across a lot of things. And so you want to find a broker, or a company that's going to be able to help you consolidate all of that into one place, and then really work with you to find out, can you bundle everything into one policy? Can you create an umbrella policy that covers the entire portfolio, to really streamline your operation?
And so this umbrella is different than the umbrella I have, right? So I have an umbrella policy, which of course it's tied to my home and auto insurance. And then I have umbrella, which covers all my rentals as well on top of my rental policy. But the umbrella you're talking about, it's different. It's combining all the properties under one policy.
That's correct. You can list the different LLCs that you might have under one policy, and then you obviously just have a shared limit within each one of those different assets. But most people aren't going to have a lot of claims on each one of these different properties. It's certainly enough coverage to just do one umbrella policy that can share those limits across the entire portfolio.
Yeah, and we usually find a lot of savings for investors within this very narrow vertical, where they've acquired multiple properties and they don't even realize, but they are well over covered on their umbrella limits. And they're just spending a lot of money, and they're lining the pockets of the insurance carriers rather than, just looking at it from a, holistic level and saying, hey, is this amount of coverage okay for all of my units? What is the likelihood, especially if it's spread across multiple geographies, that I'm going to have catastrophic loss across the entire portfolio?
So we need to chat then about my portfolio early next year.
Oh, absolutely.
So also you mentioned about the difference between the owner's insurance and landlord, and you said that the landlord policy only covers bare bones. So should someone require tenants to have a rental insurance?
No, absolutely. And I think most leases require that.
Right.
Tenant actually do it. The problem is that, in the midst of everything else that's normally going on when you're getting new tenants and units, trying to go out and get verification of a renter's insurance policy is usually, put on the back burner.
Exactly.
It should be at the forefront of what you do, because again, it goes back to the exact same conversation we had at the beginning of this, is that you're not in that unit. You might not have ever met this renter. They might have met the criteria they were looking for, and they've paid their deposit and their first month's rent, but you still don't actually know this individual. And so making sure that they have a policy, and not only do they have a policy, but do the limits actually the entire asset. It's very easy to go out and get, say a Lemonade or a Hippo renter's insurance policy, but if it only provides, maybe $50,000 in coverage or $100,000 in coverage for damage that they might do to your actual unit, that's something that also needs to be addressed. And so making sure that, that there's a system or a workflow in place that you as a landlord have to make sure that you're validating that they have current coverage in place is going to make sure that in the event something happens, their insurance is what's going to cover the asset, and then your policy can come into place after.
Got it. That's a great point. So now let's talk about actual insurance policy. How can someone shop around for policy? How can someone figure out, they are getting a good deal or good price? Because a lot of time you are not comparing. I feel like when I reach out to two agents, even though I give them my criteria, I end up comparing apples to oranges because they do not have the same coverage.
Sure. I think going in well prepared is a good way to start. If you go in and find, I always recommend, Ryan and I do this as well, at least before we had our own platform for this, is that to go out and find 3 different brokers,
okay.
And then they will work to go out and get you different policy premiums and different options. And then if you can go in well armed to understand how much you want the coverage limits to be, you can start to be able to compare apples to apples, at least a little bit more.
Okay.
I think the challenge for a lot of brokers is that it's, insurance is still quite an antiquated industry. It's still very paper-based. And so it's challenging for them to go out and get multiple quotes. And so, even though that might be difficult for them to do, you still want many quotes to be able to compare.
Right. Yeah.
Because then at least that they've gone out to at least more than one carrier to try and bring this to a market. And then when you're able to look at each one of these and say, the limits are very similar on each of these, they're all very highly rated carriers, then you can start to make a more informed decision about the policy that you're going to ultimately purchase.
Yeah, and a lot of that going to multiple brokers is that brokers have different carrier relationships as well, which is super important because if they have limited carrier relationships and those carriers are changing their own personal risk profiles, oftentimes you might go to one carrier where they had a huge appetite for multifamily, and then the next year they might have gotten hit hard with a hurricane, and they don't want that risk anymore, and they're going to price it appropriately. They actually, overprice the risk. Now, if you're stuck with one broker that only has that relationship, you don't have a really good way of having a good price comparison with another carrier who has a much larger appetite for that risk. So it's important for you to really be able to go out and make sure that you're getting competitive bids. Yes.
So what are, let's say, top 5 or top 10 items in a policy someone should look for? Is it coverage limit, replacement guarantee, tenant loss, renters loss?
Absolutely. I think you really hit the main ones. I mean, you obviously want to cover the structure. That might be in 2 ways. There's either replacement cost or actual cash value. And so the replacement cost is what you've determined with your broker to go out to the market, the insurance carriers, and say, if I experience a total loss, here's how much it's going to cost me to rebuild. The actual cash value is if you go out to the market today and say, this is the actual cash value for this asset in a reasonable market, and this is how much I expect to get back in a total loss. So that's the first thing that you want to think about, those types of overall broad limits on the actual building itself. And then drilling down from that is obviously the general liability limits that you have in the event somebody gets hurt. That's
a big one.
Oh, absolutely. With the cost of healthcare, especially in the United States, it's, those bills can rack up.
Yeah.
Depending on what happens, how it happens, who's involved, if there's more than one person involved, you want to make sure that you have, adequate.
And this is not what we are talking about, but we are in the most litigious country in the world. And then healthcare is a sham, right? And medical insurance is a scam. So
and it's expensive. And unfortunately, landlords, they're not an easy target per se. But if it's if someone's walking on a property and it's a renter that lives there, it's not the person who owns that home, right? You're distant from the actual owner. It's not. It's much easier to be more litigious in that situation because, you don't have a personal relationship with the owner.
Exactly.
And so that puts you in a precarious situation as a landlord. So general liability limits are very important. And then also, just thinking about, whether or not that, you have vacancy within there, making sure that you have business income loss coverages in the event that for some reason a unit is not able to be rented, it's vacant, there was an issue, maybe there was some flooding or a pipe burst. You want to make sure that your own business income is covered as well.
Yeah, and I think kind of just to finish off, making sure you have a broker that is in your corner to, tell your lender that they might be overreaching a little bit in terms of their coverage requirements, and having them explain to the lender, based on your loan covenants, hey, we don't think that this amount of coverage is appropriate. Here's what we think is actually more appropriate. And oftentimes this will save you a lot of money.
That's a great advice. So another question I have, why do premiums rise every year? And what can you do to ensure that doesn't happen?
Well, this comes down to having a good relationship with your broker. I think your premium, assuming you're going to stay with the exact same carrier, is typically going to rise every year because those have the most information about your asset, and they've gathered that information over the course of the year. And so your premiums are going to also increase because the easiest thing for you to do as a landlord is to renew that same exact policy, that same exact carrier. And so they know that, they understand that there's a 92% chance typically that you're going to renew with that carrier year over year. And so it's also, as we talked about before, challenging for a broker to go out and get multiple policies. It's still a very paper-based process. It still takes sometimes weeks to turn around that quote. And so for them on a renewal, knowing that they have the relationship, they might only go out and get, quote from the same carrier you already have, and then maybe one other. And so it's more about an ease for you as the landlord to just sign and re-up. What you want to find is a broker that is going to go out and work on get several quotes, and to ensure that the policy premium that you have with your existing carrier is either at market, or you're going to be able to find something that's a little bit cheaper that's out there as a brand new customer to a new carrier.
That's a great point. Sorry, go ahead.
The reason premiums also rise is the value of the real estate is just going up.
Sure.
I see.
You have a lot of situations, again, driving back into discussing things with your lender where they want to insure it based on actual cash value. And you need to make sure that you're obviously covering the remaining balance of the debt that you have on the asset. But the premium doesn't need to rise because the value of the assets risen because our cap rates are compressed right now.
Right. Yeah.
If the cap compresses 1% over a year, it really doesn't change the actual insured value of the asset, even though it might go up and adjust as a result of the increased value of the property. But most of the time, that's in the dirt itself, really not in the bones of the building.
So, in which case do you recommend getting a replacement coverage instead of actual value coverage? Because I usually go with replacement coverage, but there has to be some cases where it's one way or other, right?
Kind of depends. I would say it depends on where you are. If you're in an urban environment that's growing, generally you're spending a lot of money on the physical dirt itself and not really the structure of the asset.
I see.
We've run into situations where folks are well overinsured because they're going after actual cash value. I would say you need to look at where the limits of coverage are, what you're responsible for from your lender, and kind of work your way backwards from there.
That's a great point. So what should I expect from my broker when it comes times for renewals?
I always tell people that I expect at least 3 quotes that are different from the current carrier that I have.
And time to make an informed decision. If they give them to you with 48 hours and you got to sign immediately, you're kind of running into a situation where you're forced into signing. Whereas, hey, maybe I don't like all 3 of these. Maybe you should go out and shop with another carrier. And we have the time to do a back and forth with the carrier themselves and say, hey, sharpen your pencil, we want a better rate. And giving you at least 30 days is a good round number for you to be able to make informed decisions and be able to go back to the carriers or go out to another market if you need to.
Yeah. And your broker should be willing to do that. Insurance commissions historically are very generous.
Yes.
At the end of the day, it is still a labor-intensive process for them. Insurance is still very antiquated in terms of new technology adoption and the advancements that are happening in other industries as opposed to insurance. But at the end of the day, they still make a very generous commission. And they should be working with you to ensure that not only you're getting the types of coverage that you're looking for, but also from the carriers that you like at a price point that you're generally comfortable with. And that's why I tell people if they've spent the time to go out and get at least 3 quotes that are different from the current carrier you have, because that current carrier can generate a renewal quote, very, very quickly. They already have your information. So those other 3 quotes are going to give you a really good sense of the market, or at least what your broker is able to do.
Right. Okay.
And if they're providing you with 3 quotes plus the one you already have, that person has done the work.
Right. Exactly.
To at least try and respect the fact that as a customer, you should have a good relationship with this broker, and that's a good indicator that they are working on your behalf and that they value your business at the end of the day.
Yeah,
that's very important. They value your business, right?
Our platform, I believe is really making strides to help to give the customers that kind of time. Our automation really lends itself to making sure that you're able to make the most informed decision, and for us to be able to get you the best price with the carrier relationships we have and the automation we have.
So let's take a quick break and then discuss about the platform.
Okay.
Sure.
Welcome back to Wealth Matters Podcast. And I'm chatting with Ryan and Aaron today. And we have discussed a lot of, residential real estate, insurance industry. And I want to talk to them about their platform and find out how can their platform help us real estate investors.
Sure. So we've developed a platform called Obie. Obie really provides small to medium-sized commercial real estate or multifamily or residential real estate owners with portfolio management. So we provide a myriad of tools that you can use to better manage the different assets that you have, whether that's the physical property information, a place to store all of that. We can pull in, your rent roll or financial information, file storage. And then we also pair that with the ability to add in anyone who might need access to that information. So your broker, if you have other investors or as LPs, potentially property managers, and then also adding in the pieces that are also products that are required for you to have. So as Ryan mentioned towards the beginning of the podcast here, we offer insurance. We're a full service insurance brokerage. And what we've really done is taken the experience Ryan and I had in real estate investing, looked at the pain points we had within the insurance space, and found how can we utilize the software, how can we utilize the information within that platform as well to really automate all of those paper-based processes we've been talking about that really plague the insurance industry right now. And so, anybody that requests a quote from us, we typically get somebody back, a quote within 3 days. We just did a very large apartment portfolio, 1,800 apartment units. We got them back a quote in about a day, saved them right around $100,000 on their insurance.
Wow. So I thought that you were only looking at small single families or small investors. But
This was actually a smaller investor who had individual properties. He was also an LP in a larger real estate.
Oh, okay.
And have started to move up that space. So we can do, a single residential rental now all the way up to, larger portfolios of deals as well. And the way that we've done this is really automating a lot of the day-to-day tasks that an insurance broker would typically spend. And so that way they can spend their time really working with you as the landlord to figure out what's important to you and how they can work on your behalf with the carriers. All the other paper-based processes, the gathering of the information, sending it out to the carriers, our platform does all of that for them. As soon as somebody hits get quote, we pull all of the information out of the platform that's needed, format it in the way the insurance carriers want it, and then it immediately gets sent out to quote. And so that way it gives you a lot of time to spend then with your broker to discuss what's important to you and how do you achieve the goals you want from an insurance perspective.
That's interesting. So, and how many carriers do you work with?
Right now we're in the 20s. So we have, a variety of carriers we work with across multiple geographies. And really our goal is to continue to grow our carrier network in an effort to get the best pricing for everybody. The publicly available information that we have, we can take what carrier wants to write risk for and pair it with the data that we have in order to, basically achieve faster quoting and better pricing for our customers.
And how can someone get started? Like, let's say I'm a newbie investor, or I'm not a newbie. I have about, let's say, 10 units or 10 different properties with different carriers. And if I want to get started on your platform, how would that work? What's the process?
Sure. So you can go to the Obie website. It's obcre.com. You can go and hit get insurance, enter a little bit of information about the asset that you have. We'll pull that out, and then we can send that out to carriers to start quoting out those policies. And through that process, you can also add in the PDF documents of your current policies, and that'll give us a good benchmark to see where your coverage limits are right now that you've already discussed with your broker and that you're comfortable with. We can create then a plan, either suggesting that you might be overcovered or undercovered in certain circumstances, and then also send that information out to really all the carriers within our network, as well as our extended partner network, to ensure that, depending on the asset, depending on its size, depending on where it's at, we're providing quotes from carriers that really want to price that type of risk.
And then let's say I put those 10 properties in the system. I provided PDFs for all 10. Do you combine all 10 into one and send it to different carriers, or do you send them 10 individually to different carriers?
So we're going to provide them with the portfolio of assets that we have, assuming that those carriers want to take in all of that information. We might find that 9 out of 10 would be really good here. You're going to find a really great rate with somebody else because, if you have something in a certain state or a certain geography or a certain catastrophic risk zone, you're really going to save a lot of money with a certain carrier. But our intention is always to try and bundle everything together. I think it makes the landlord's life a lot easier. And then it also, makes our experience as a broker much easier to go out and find you the best rates by bundling all of this information in one place.
That's awesome. That's pretty interesting. So can you talk more about the platform, something we haven't discussed?
Sure. Yeah. I mean, I think our goal at the end of the day is to really save a lot of time and redundant communication issues that occur. And, that happens often in insurance, but also communication between any of the third-party service providers you might have. So we have a task management system baked into our solution. It allows you to add any of the stakeholders, give them tasks, give them due dates. You can drop documents and information in. So if you have a maintenance issue, it can be tracked across the progress between you and the property manager and maybe your maintenance person. The ability for you to be able to send out reporting and bring your limited partner network inside the asset has also been helpful.
That's great.
For most of the time, at least in my former life, we sent out a lot of information and communicated data across email.
Right. Yeah.
We actually provide LP investors with a small dashboard that they can help understand how their entire portfolio is performing, rather than little tidbits here and there, and see whether or not it's performing or not performing, and then be able to understand whether or not they want to continue to invest with that individual. That's
awesome. Did we forget to talk about anything before we wrap up?
No. This has been great.
Yeah.
This has been great. I really enjoyed this.
So how can my listeners reach out to you guys?
Jumping on the website is a great place to go. And then they can also reach us directly. I'm Aaron at obiecre.com, and Ryan is
Ryan at obcre.com.
Awesome. And if they have some questions about the website, do you have like contact us or they can talk to someone?
Absolutely.
Yep, we have a multitude of ways that you can get in touch with us. We're adding in a direct chat system in next week. So you'll be able to catch us basically during office hours, which are Monday through Friday, 8:30 to 6 Central Standard Time.
Thank you so much for your time and good luck with the platform.
Thank you.
Thank you.